October 21st, 2024. Today we had consecutive sell climaxes on the open. So you can see we had the first sell climax and then an inside-inside pattern, which is a pullback. And that's also a final flag. And then another sell climax, 1920, then a pullback on 21, and then three more bear bars, which qualified as the third sell climax. So one, pullback two, pullback three. A lot of times when you get consecutive sell climaxes on the open, you get a reversal up between bars 19 and 20 or 24 and 30, I would say, is usually pretty much the area. Sometimes it's a little bit earlier. Usually the market, if it does rally back up towards the high of the day, has a very tough time getting above the high of the day. So when you're buying in this rally, you know the very maximum profit target is going to be up here. Today, what we ended up doing, which is relatively common, is we rallied to around the midpoint of the day. And then obviously the day isn't quite over yet. I'm a little bit early. The market closes in 8 minutes, but we rallied to about the midpoint of the day and then basically just oscillated around the midpoint for the remainder of the day. So we had consecutive sell climaxes on the open, a rally, and then sideways. I have a few other examples of consecutive sell climaxes. And there's a couple of specific ones I wanted to show. This is today. Example one, pullback two, pullback three, reversal up around bar 30, the bull channel, and you can see we rallied back to the bar one low. The bulls who bought below one were able to exit their trade without a loss. Some of these are bad examples, but it's part of learning, it's making bad examples. So the good examples, three pushes down, rally around 18, but not as defined. This is a good example. One, pullback two, pullback three, a big reversal up, and then a rally the remainder of the day. Again, back up to that bar one low. There's one other reversal number 18. There's one other example that I want to show, this one. So you can see one, pullback two, pullback three, and then a bull channel. And we did go to a new high, but you can see when we got to the new high, it failed pretty miserably. Three reversals down, but then 16 of bar reversals. This one had an earlier reversal, but usually you can see the point. It's between bars 20 and 30 usually when you end up getting these reversals. This was bar 36, but today's was pretty on par, bar 25. So it was pretty normal for this particular pattern that we got. Bar one, a bull bar. You know there's probably buyers below bar one, scaling in lower. You can see we're around the middle of yesterday's range, which increases the odds of an inside day today. However, obviously we did not have an inside day, but whenever you open in the middle of the prior day's range, the odds of an inside day are increased. Bar two traded below bar one. You know there's going to be buyers below bar one because most bears do not want to sell below a bull bar. Most traders, if anything, are looking to buy below a bull bar. So we have an outside bar on bar two. However, it closes below its midpoint. It did go further above bar one than it went below bar one, so that's good for the bulls, but still mostly just a doji bar. We have consecutive doji bars essentially. However, still going to be buyers below two, scaling in lower. So it's not surprising on bar three that we end up getting a non-bear close doji bar here. Bulls were willing to buy below two during three, and we ended up getting the doji. You know the traders who bought below two are just looking for a scalp, so they might scalp out if we trade above two. So you can see on bar four, we rallied above bar two. This is not really buy the close though. This is probably more of the sell zone. You know there are going to be bears selling here. Why? Because we have three dojis on the open. So when you start the day off with basically three doji bars, you know there's probably going to be sellers up here. Some traders might sell the closes. Other traders might buy the lows somewhere down here. So limit order bears are going to start scaling in up here. And bulls, instead of buying closes, they're going to look to buy retest of the bar three high, maybe retest of the most prior legs low. So bar four low, it's a bull bar, right? So there's going to be bulls buying below that like they were during six. 5 consecutive bull bars. We have 4 straight bull bars or 4 straight bull closes, 3 doji bars so far of those 4 straight bull, or sorry, of those 4 bull closes, 3 of them are doji bars, and bar 3 is a doji bar. So it's really not worth doing much here. Buyers below 5 during 6, around a 50% pullback. Buyers below the bar 4 low and at the bar 3 high during bar 6. So we're basically around the midpoint of the day's range so far. However, 6 is not really a sell to close bar since we haven't had a bear bar yet today. So there's probably going to be more buyers in this area than there are sellers. 7 initially rallied up to the bar 5 close. So the bulls who bought the close of 5 scaled in lower, maybe below 4, are able to get out of their trade during 7. 8, another bull bar, but a tail on the top, so not really quite worth buying. I think it's better to wait because this could be a third push up. 1, 2, first push, 4, 5, second push, 8, 9, or 7, 8, third push. So the bulls are going to need a pretty clear breakout above this bull channel if I'm going to buy. 9, a bull bar closing near its high, but this is not a clear enough breakout. I'm going to need at least one more bar of follow through for the bulls for them to convince me that we're going higher. Otherwise, I'd rather just wait. And they get bar 10. Bar 10 is technically follow through for the bulls. The bears see a wedge, 2, 5, 10, but it's not worth selling below 10. It's a really small bar. Probably better just to wait. Like I mentioned, though, 10 is technically follow through for the bulls since it's a doji bar. However, is this the type of follow through that makes you excited if you bought above 9? No, this is pretty disappointing follow through. So most traders are not going to buy at the close of 10. They're probably instead going to look to sell out of their longs. If I bought the close of 9, I wanted to see a good follow through bar on 10. Instead, I got a doji bar. So I would not be all that thrilled about being long above bar 9 if I got 10. And then you get 11, a bear bar closing near its low. And now we have 3 legs up. 1, 2, and then 3, 4, 5, and then 7, 8, 9, 10. So we have 3 legs up for the bulls. So what does that mean? Generally, when you get 3 legs in one direction, you're going to get 2 legs sideways to down in the other direction. Usually, third legs, you can buy below a third leg and expect the market to retest into that area in general, or sell above a third leg and expect the market to retest into that area. So I'm trying to look for a good example. This is not the world's best day, but as an example of what I'm trying to demonstrate, let me pause the video for a second. I'll pull one up. So just like in general, 1, pullback, 2, pullback, 3. If you sell above the third leg and you put a stop, a measured move up, and you're trying to get back down to that leg, increased chance that that's, or good chance that that's going to happen. So if you're fading third legs, here, if you bought the close of 30, or sorry, you bought the low of 30, right? 1, pullback, 2, pullback, 3. So you bought the low of, not 30, sorry, 28. You bought the bar 28 low, trying to rally back to the top of the leg. The bar 30 close, a stop down here. Some traders would take that trade. They'd buy the low, and then they'd use bar 43 to exit their long. So in general, if you fade, in general, the market will trade above a bear third leg or below a bull third leg. And if you fade that, or just trade with that, then you will usually make money. And so it's interesting here that the bulls got trapped. You see, you have a bear bar closing near its low, 11, a possible swing trade, and then follow through 12. So consecutive bear bars closing near their lows, 11, 12. By the way, the market did the same thing on the other consecutive sell climax days that I showed. Remember how it rallied back to the early gap? It just did that again. The open gap with the 3 low and the 14 high. If you rewind the video, you'll notice that on the consecutive sell climax days, most of them form an early open gap. You can see we got back within that early open gap over here. So usually when the market forms an early open gap, it ends up closing since most days are trading range days. So 12 consecutive bear bars, 11, 12, at least one closing near its low and trading below that third leg. So some bulls would be looking to buy in here, betting that this is going to get a second leg up and we'll rally back somewhere into this area. Instead, you get 13, another bear bar, closing below the bar 3 low, a large tail on the bottom of 13, but still 3 straight bear bars, so you could sell the close of 13 for a second leg sideways down. 14, another bear bar, so you have 4 straight bear closes. And me, this is more of a major breakout at this point. 11, 12, 13, and 14, we're going lower. You can sell the close. I think it becomes high probability on 13 and 14. Again, still high probability, 4 straight bear bars. You could sell the close looking for a second leg down. 15, more follow through for the bears, but a large tail on the top. A large tail on the bottom. So we're still going lower. However, this might be, starting to pull back relatively soon. 16, a huge bear bar, but a massive tail on the bottom. The bulls and the bears see the sell climax. However, there's nothing really to buy. So that's kind of the dilemma here is, do you really want to sell the close of 16? Not particularly. It breaks out below the low of the bear channel from 12 to 15, and it's an obviously climactic bar. However, we have basically 6 straight bear bars that are pretty large, so it's not really great to be buying or to be selling the close of 16. 17, a doji bar, an inside bar. It's a low one short for the bears. Most likely, if we do go lower, we'll rally back into this area. 18 consecutive inside bars. Sometimes on the open, you'll get consecutive inside bars after a sell climax. So sell climax, inside pattern, and then the market will rally for the rest of the day in some sort of bull channel. Obviously, we do not have that here. as the market broke below the bar 18 and 17 and 16 low for that matter during bar 19. So a big breakout below the low on 19, closing below the bar 16 low. Good for the bears. However, I think that 16 was really climactic, and that we might get 1 to 2 more legs down, but I'm not sure how much further they're going to go, even though 19 is a good looking bar. 20 is really strong, and we have consecutive bear bars, 19, 20, with reasonably strong closes. However, this is more of a buy the close bar than anything. If you think about it, look how far below the moving average we are. If you're selling the close to 20. You are selling 25 points below the moving average. Do you really want to sell 25 points below the moving average? Not particularly, because the problem is, in order for you to make money on this trade, the market probably has to go 40 or 50 points below the moving average. So when we're this oversold, do you really want to sell the close of 20, taking a chance that we're going to collapse further down? Not really, because the odds of that are probably only like 40%. So some traders will sell more of a 50% pullback during 21, but a lot of traders are not really going to be that interested in selling the close of 20. Instead, what some traders will do is they'll buy the close of 20 with the exact opposite equation. So they'll put their stop a measured move down of 19 and 20, knowing there's only about a 40% chance that we get there before we rally back up towards this high. So yes, this is, consecutive bear bars. Obviously, we're always in short, but this is too far too fast. However, when you do get these giant sell climaxes at the end of trends, there's a 60% chance you get one more leg of sideways to down trading, and a 60% chance it's the end of the trend. That's what I was looking for there. So 60% chance that this is the end of the trend, and 60% chance you get one more leg of sideways to down trading, which we did right here. 22, an inside bar, or I don't think I went over 21 yet. 21 pulled back to around 50% and then sold back off. So probably buyers below the low, scaling it lower. 22, an inside bar, a bear bar, probably buyers below. It's an inside pattern, same as here. Inside, same as here, inside. Really, it's just a final flag. 23 consecutive bear bars. You can see we sold off back to around the bar 20 close. So the bears who sold close 20 and scaled in might be able to make money here during 23. 24, another bear bar. Look at how small these bars are there, though. The energy is really not there. 19 and 20 were two massive bear bars, and now we're getting a couple of weak bear bars, 22, 23, 24. You could argue it's the start of the bear channel, but I'm not really all that sure. To me, it looks like consecutive sell climaxes. Reality is this is just too much, too fast. So we got 40 points in basically 13 or 14 bars. So is this going to be like a 250 point bear trend day? Probably not. Those are pretty unusual. So for the most part here, I would not be looking to short in this area. Probably an area to look to buy. 25, a bull bar closing near its high. Probably a reasonably decent probability of getting some sort of bounce to the moving average, maybe 50, 55% after these three climactic legs down. So traders will buy above 25 after three pushes down, betting on two legs sideways to up, lasting at least 10 bars. 26, some bulls bought the 50% pullback of bar 25, and some bears who sold the close of 24, disappointed 25, bought back their shorts around break even during 26. And you get consecutive bull bars closing near their longs, 26. So some bulls buy above 25, others wait for better probability and buy above 26. If you're going to be selling, 22, 23, 24, if you're selling anywhere in this area, you have to kind of be aware of the situation and what you're doing. So if you're going to do that, you have to get out above 25 or 26. You can't just hold because it's not going to go well. 27, three straight bull bars closing near their highs. We have a couple open gaps with the bar 25 high and the bar 27 low. So if you didn't want to buy above 25, you wanted to wait for follow through, which you got on 26, and then tried to get filled at the 25 high, you would not have been able to. So three straight bull bars closing near their highs, 25, 26, and 27. We're going to get at least a small second leg sideways up, and we're probably going higher. So 28, four straight bull bars closing near their highs. At this point, we're getting a second leg. The question is, what are we about to do over the next 10 to 15 bars? I think that, there are a couple of options. We could rally above the moving average and go sideways and then get a second leg up. That's what happened today. It's possible sometimes, if you rewind the video and go look at those sell climax examples I showed, sometimes you don't really get a pullback. It'll start to rally, and if it's forming open gaps, it'll just kind of keep pushing higher until it closes this gap, the gap that forms early in the day. You can see today was not one of those days. We didn't reach that until the very end of the day. It was really hard to hold long the whole day. So we did not quite get that today. And occasionally you'll get a breakout back below the low of the day. So some sort of midday reversal and a breakout back below and a couple more legs down. But that's a little bit more rare. So I think the best case scenario for the Bears at this point is a mostly sideways day. 29, a doji bar. You can see what's the most recent sell climax high, right? At this point, we've broken above the bar 23 high or 22 high. So we're probably going for the bar 19 high at this point. So you'd imagine there would be some sellers at the sell climax high, bar 19 high. 20, so 30, a bull bar, but a large tail on the top. You can see rallied back to around the bar 19 open and then failed, large tail. 29 is a doji bar, indicating that we're probably going to start to go sideways soon. 31, another doji bar. So the bulls are hoping it's a high one and that they can buy above and we get a swing up. And the bears see a low one short. They're hoping for a double top bear flag, 1930, but it's really not all that likely. Buyers below 31 during 32, probably going to get at least a small second leg sideways stop. 33, another bull or another bear bar. We have three straight bear bars, 31, 32, 33, but they all have large tails on them. So it's really not all that great to be selling. 30 is its own buy climax, right? 29 is a pause bar, a doji bar, and 30 is its own buy climax. And when you get a buy climax like that, the low is often a magnet. So you know there's going to be bulls buying the low of bar 30, willing to scale in with limit orders. 34, an inside bar. It's a high one buy for the bulls, probably sellers not too far above, probably buyers not too far below. 35, a bull bar, but a large tail on, or a tail on the top, tail on the bottom, not really worth buying above 35. 36, a doji bar. We're just going sideways. We're always in long, so if you're long, you could be holding long, probably still stop below 25, waiting for the higher low to confirm, basically waiting for us to close above bar 30 high. 37, another bull bar, but not really all that great. You're buying high in a tight trading range, 31 through 37 so far. 38, a bear bar, but buyers below 37 and a large tail on the bottom of 38. 39, an inside bar, a bull bar. Probably sellers, somewhere up here, but this is three pushes, right? So we have a rally and then three pushes, one, pull back, two, pull back, three, and it's pretty sideways. Sorry. So a lot of times you hear, you getting a correction sideways to down, and this is one of those examples where it was really sideways to borderline up. So it was it was a pullback for the bears, but it's still strong for the bulls. 40 consecutive bull bars, good for the bulls, probably going at least a little bit higher. And then a big bull breakout on bar 41. Good for the bulls, three straight bull bars. You could buy the close of 41 or wait for follow through. It is a breakout above the bar 30 high, so we're going to get at least a small second leg sideways to up. 42 consecutive bull bars, four straight bull bars here, 39 through 42. Some traders buy the close of 42. Again, I thought the target at this point was this area. I did buy that close. I took a couple trades today. I sold the close of 13. I've been just doing leg one, leg two trades because I've been studying chart reading for so long, and I was frustrated as to why I wasn't doing well trading. I mentioned that a little while ago. I just started studying trading instead, just the math and stuff, and I've been doing really, really well for a while now. So, but I sold the close of 13 today, went for a measured move, got out here, and then I bought the close of 42 and went for a measured move, trying to close this gap. I ended up getting out somewhere in here for a small loss. Technically 57 was a sell signal for me. I have, signals. So technically I should have sold the close of 57 and gotten out down here, but I didn't end up taking that one, but I should have, but I obviously did not, as I mentioned. So I still had a decent day, but I probably could have made it at least a little bit better, but I'm not as worried about the trades I don't take, more worried about the trades that I do take. Anyways, 42 consecutive bull bars. So four straight bull bars, 39, 40, 41, 42, a breakout above the high. You can buy the close 41, 42, taking a chance to get a second leg up. 43, a doji bar, so disappointing follow through, but we're probably going at least a little bit higher. 44, a bull bar, closing reasonably near its high. It's breaking out above the bull channel line, 41, 42, 43. It's good for the bulls that we're starting to rally, but that the magnet above is here, and the risk reward isn't all that great being long at this point. You're trying to make 6 or 7 points, and you probably have to risk 12 points. So when it's like that, when the risk reward is like that, you want to see the market kind of race up towards your profit target and quickly get you out. In this case, we got consecutive bull bars closing near their highs, 44, 45. However, we need a vacuum test pretty quickly here. If this is high probability, it's not going to keep printing bars like this, trying to just get to this magnet. If it keeps making a bunch of bars like this, we're probably not stopping here. usually what you'd like to see is just basically one really big bar, something like 30, just rally up to this area, hit the target, and then sell back off. So when traders don't see a lot of follow through 44, 45, they get concerned. Some of them exit 46 and look to buy a pullback so that their trader's equation is better. Because if you're buying, let's say, the 42 low, you're now risking 11 points, or sorry, you're risking 8 or 9 points trying to make 11. So your risk reward's a little bit better. It's a little bit more acceptable to go for that. So that's why 45 is an outside down bar. Bulls buying below any bar on the way down. 48.7, an inside bar, a high one buy for the bulls. So bull spike, pull back. Bulls are hoping this is the start of a bull channel up to the magnet. 48. I'm going to get a sip of water. 48, a bear bar, but not really worth shorting below. There's probably going to be buyers below 48. A high one buy, 49, but not really worth it. You can stay long if you're long, but again, you're just looking for a vacuum test of the magnet above. 50, another bull bar, consecutive bull bars. Probably going at least a little bit higher. Question is what happens at the 45 close. Bulls who about to close at 45 and scaled in, will they be disappointed and try to exit their trade, or will they look to hold long? 52, another bull bar. It's possibly a third push up, 47, and then pull back 48. 49, 50, second push, pull back 51. And then 52, possibly starting the third push. 53 consecutive bull bars, but a tail 52, a tail 53. Not really all that great. And it's a third push up. So probably buyers below scaling and lower, but not as good as it could be here. That we have 3 legs up. 54, an inside bar, a doji bar. Do you sell below 54? I probably would not, but it is 3 pushes up for the bulls. 55, another bear bar, but again, it's more of a doji bar. The bulls, again, trying to get a breakout above the 3 pushes and rally up to the magnet above. And instead, a lot of them end up exiting on the close of 55. So you're hoping to get a bull bar 56. And instead, bulls exit, and that causes 56 to be a bear bar. So some bulls will exit below 56, basically just thinking that bulls gave up and we're going to get a few legs sideways to down. Some will wait for 57, consecutive bear bars closing near their lows, and they'll exit below there. Some traders could sell the close of 57, first close below the moving average. The issue is the bull channel up is pretty tight. So while we might get a second leg sideways down, I'm not sure how much lower we're going. 58, a bull bar. It's a high one for the bulls, but after 4 straight bull bars, or bear bars, nobody really wants to buy above 58. And then outside down 59, a large tail on the bottom of 59. So that's good for the bulls. However, they're hoping it's 2 big legs sideways to down. So the first leg, 54 to 57, and then a pullback 58, and then a second big leg, 59 outside down. And then they're hoping that we essentially get a high 2 and rally, but it's not really all that great. 59 is a big enough surprise that it's going to get at least another leg sideways down. You can see it was strong enough that it ended up getting 3 total of its own legs sideways down. So 59 reset the market cycle. And second leg, 62, 63, third leg, 65 through 67. So 60 an inside bar, low 1 short, probably buyers below scaling and lower. 61 is a high 2 for the bulls, but not worth buying unless you have a really wide stop and are willing to buy more below 61. 62, a bear bar closing near its low. It's a low 1 short, but it's a possible third leg down. 63, follow through for the bears, but not closing below the bar 59 low, and it's still 3 pushes down. So the bulls are looking to buy a reversal up. You can see we're getting back to around the bar 41 low, the buy climax low. 64, a bull bar, but probably sellers above. This is a tight channel down, but probably buyers below. So these are kind of the areas where you'd rather buy below bars than above them. And then 65, an inside bar closing near its low, probably buyers below. Doji bar 66, more follow through 67. But again, as much as this is a tight channel down, we keep getting reversals up, and it's not like it's the context of the day at this point is big bear trend. The best case scenario for the bears, we're probably getting back into this area, which is probably going to be part of a trading range, and we still have the magnet above. 68, a big bull bar. Probably a lot of bears will look to exit. Again, I think it's just a trading range. 69, consecutive bull bars closing not quite near their highs, but really large bodies. Good for the bulls, probably going higher, but you're getting towards the top of the trading range. So as good as 68, 69, 70 looks, we're now at the top of the trading range. So it's really not worth buying. Disappointment 71 isn't surprising. Some bulls who took a chance buying the close of 70, taking a chance that we get an immediate rally to the bar 3 low, are disappointed in how 70 goes or 71 goes, and so they use 72 to sell it along, so around the bar 16 or around the bar 70 close. 73, a big bear bar, but a tail on the bottom. Three straight bear bar, 71, 72, 73 after 68, 69, 70. And we sold off back to the bar 67 close. Bears buyback shorts, 74, an inside bar, a bear bar closing near its low. Possible short, not really worth it. Disappointment, 75. And then you can see 76 bull bar closing near its high. Some bulls double bottom, taking a chance we get a measure move up, maybe 40% chance of it. Maybe a little higher since the magnet above. And you can see we ended up getting a big exhaustive bull bar to the upside back into this area, which isn't that surprising because, like I mentioned, this is the area that we were targeting earlier. So for trades today, you could sell below 11, aggressive but reasonable. You could sell the close 12, 13, 14. I would not sell the close of 15 or 16. 19 and 20, not really great to be selling. 20 more of a buy the close bar. If anything, you can buy above 25, 3 pushes down. 26, 27, potentially. And then we get a sideways pullback. Then another rally. You could buy above 41, 42. You could sell below 57. That's fine. And, bears get basically a wedge sell off and then a reversal up 69, but not really worth buying the high 69.70. Better to look to buy the low 373. Obviously, if you tried to buy the actual low, you wouldn't get filled, and you could buy somewhere in here, obviously for a magnet or test the magnet above, but really late in the day, kind of difficult to do. For limit orders, I don't know. I don't think there was, I guess buying below 45 was an easier limit order trade, but you'd have to buy a little bit further below. You probably could have bought below 2. You could have bought below 5. Third leg up, so you don't want to buy below third legs up. Most of this stuff, maybe buy the close of this, but I don't think this was the easiest limit order day. On the daily chart, we went below. I'm going to turn on the Globex. I like to do that for the daily chart. We went below yesterday's low, but after 3 straight bull bars, you'd expect that there's buyers below. Ignore the ones. The ones are just due to my bar counter. I don't know why it does this, but it does. But you expect buyers below this day, so we're probably going at least a little bit higher. Again, I think we're going to 6,000. I don't know if we pull back first, but we're definitely going to 6,000. The weekly chart, 5 straight bull bars. Bulls hoping for another bull bar with this kind of micro channel. They also want the kind of vacuum test that I was talking about, where they just want us to get basically a quick rally and a vacuum test of 6,000 and then start to oscillate around that number. I don't know if they'll get it super quickly. And then the monthly chart's starting to become relevant. We have a really shrinking body size if the month closes like this, a pretty small month. So if we close like this, obviously the body size is shrinking a lot, but we might have to get to 6,000 by the end of the month. Okay, I should be back to my regular schedule. My laptop is fixed, and I was really sick this week or last week, but I'm feeling better now, and my laptop is fixed. So should be back to the regular schedule with videos, and there'll be a live trading video tomorrow.